I have a good one today. Hopefully everything is going well with sound. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest anything you're not willing to lose or lose sleep over. So we had the rate hike last week. I was hoping for a higher rate hike because that's what I think he should have done, because he's running out of time for his soft landing. That's not going to happen anyway, so you might as well make it sharp, hard, and fast so the economy can recover and everything. So I have a nice little flow chart here for you guys that's going to break it down, hopefully make it easier. It kind of looks complex, though, the little drawing chart here that I made. I'll talk about that in a second. Today is Sunday. It is the 18th, December 18th, Sunday night. By the time you're going to watch this, it'll probably be Monday morning or noon or afternoon tomorrow. So, let's talk about my website and the private group. I'm going to do an end of the year sale. I set it up. If you click this, it was $50. Now it's down to $10. That's basically free. That is like a cup of coffee these days, right? With inflation. And then it's $20 a month. So it's $10. Just check out. And then wait for your email, usually by the next day. And then you could enter the private group, and then it's $20 a month. There's research reports and the alerts. There's an elite news. There's an elite self-sufficiency group. And then there's the chat where everyone just talks and shares good stuff. Opportunities, big opportunities. Some of the guys got in on the Trump NFT cards, and those have done really well. 5x, 10x. You know, a little bit of speculation. It was only like $100 for one of them. So, and if you got lucky, you got a good one. I mean, I saw them going for, some for 100 ETH. I don't know if anyone bought them, but that's what people are trying to sell them for. But I did see a few have sold for like an ETH or more. So, all right. So this is how the markets ended last week. Let's get into the good stuff. Let's get into the alpha. Then we'll go into charts and then the news. All right. Here's what I drew. It's not the best, but that's not the point. The point is to somehow make this understandable for the psychology that's happening right now in the markets and how it relates to the real economy and the rate hikes and whatnot. So we're heading. Powell said he wants over 5%, right? That's like 5.1 on the federal funds rate. For home mortgages and auto loans, I don't know. It's like going towards 10% or higher, and that's at the same time that unemployment's gonna start taking off pretty soon as we go into a corporate earnings recession. It's just gonna be bad, really, really bad, and that's what I think they want, and that's pretty much what we need. And you know what? The free market would have done it anyways. So, and this is what needs to be done. I've said this. But let's understand how the market's really thinking about all this. Now, I don't think the participants within the markets, the equities markets, they understand what's going on. They're more short-sighted. But this is kind of like what's happening. The smart money gets it, and institutional investors and whatnot, but here's how I see things playing out as of right now. Okay? Now, inflation is coming down, but is it coming down fast enough? No. It's not. It came in at 7.1. I put it out in the private group. If it's like at 7% or higher, the market's going to sell off because inflation isn't coming down fast enough. It did beat estimates, but that doesn't mean anything. 7 is really high. And if you adjust it, I mean, if you take it according to the way they used to, measure inflation in the 80s, the right way, it's around 15% year over year. All right, so inflation's high. What does that mean for the markets? It means market short-term downside risk. So, that doesn't mean that it's like higher than 7%. It just means it's not coming down fast. That's all it means. So, if it's coming down 25 basis points every quarter, it's not coming down fast enough. And then that means more rate hikes or higher rate hikes or holding rates where they're at or higher for longer. So rates higher longer. Economy short-term crash landing. But long-term strength. Why do I say that? Well, the harder the economy dumps, more of the bubbles burst and more of the malinvestment gets flushed out of the economy. So for long term, it's really good. A lot of tech jobs, a lot of paper pushers, just a lot of malinvestment, bad companies, zombie companies, they go under, and it's good. But short term, and what I mean by short term, I'm talking like 6 months to 2 years. It's really bad. It's going to be worse than 2008. And of course, things are going to break. And they're already, right? Like Blackstone, like who knows what's going on. I mean, crypto is breaking. That's already breaking. So, yeah, long term, the more sharp and more horrific this recession is going to be, the better for the long term. Also, it does mean emergency stimulus, which kind of brings you back to the short term. But, this is going to come in waves, all right? So, Powell was hawkish, very hawkish. He said many things, right? He said, I didn't write them down. I wrote them in the chats in the private group. He said a lot of things. I should open up chat. I just don't want to edit this video. I'm not gonna read it. I remember for the most part. He said things on the lines of, if we don't get it right this time, it's gonna be really bad. Meaning, he can't screw up. If they pivot too soon and they start lowering rates too soon and inflation comes back, I mean, that means they might not be able to get the music playing again. Period. That means the DXY is just going to fall through the floor and it's just going to be really, really bad. And we can't have that. Like runaway inflation, they can't stop it. Like imagine inflation running away and they're bailing out the economy with stimulus. Then we're looking at Venezuela type situation. So, and again, I've said this in my previous video. They're more afraid of stagflation and inflation rearing up its head, and they pivoted too soon because then the Fed loses all credibility. And then BRICS is going to take advantage of that with their gold for oil settlements, which is like $1 for a barrel. And that's going to happen eventually. I would rather it happens later than sooner, because that means it's really bad in the U.S., like really, really bad, and none of us are ready for that. We're not, okay? Um, Unless you got like, like, trust me, none of us are ready for that, and none of us really want that. Not yet. Um, there's more money to be made. Before all that. So he's gonna break the economy. He made it very clear in the last FOMC press briefing, and job market's still strong, but it's not really. It's already really getting weak. I don't see hiring signs anymore. If you do, it's like for very low paying jobs that don't pay enough for living. And they're just going to hide behind that data as long as humanly possible. And he's going to keep raising probably 25 basis points, 2 more at the most. And then he's going to try to hold it. I don't think so the market is calling his bluff in the sense of what the Fed is saying their game plan is. And I get it. Things are going to break probably within the next 2 months. And they could happen quickly. You're just going to see it could happen literally this week coming up. And it could happen in any given moment. But I don't see the housing's already starting to free fall, and they're trying to hold up the prices, but there's like a standoff between sellers and buyers. But no one could buy anyways because they don't have the down payment, because the down payments go up, not just your monthly mortgage payment, right? So prices must come down substantially, but you're already starting to see breaks. Like I've been going on all the sites and I've been looking, and you're starting to see the prices coming down quickly as well. So, and you're going to start seeing capitulation and panic. You're going to see people, who have most of their wealth in their home, and then they're not going to have enough for retirement, and they're going to panic. It's unfortunate, but it's going to happen. So, and then there's all the people who are doing they want to rent out homes and make a business out of that. There were flippers, the home flippers, and then you have the whatchamacallits, renting out homes for vacations or whatnot. I forgot what it's called. All right, anyways, just put it in the comment section. I know someone's just screaming right now, like, it's whatchamacallit. It'll hit me in a second. Anyways, so inflation stays higher. That's actually good for the economy, believe it or not, because that's forcing the Fed to panic and to hold rates higher, maybe raise interest rates higher than expected. Whatever it takes to break the economy, destroy demand. It will bring down energy, commodity prices, and all that. There'll be massive layoffs, and the malinvestment kind of gets, destroyed, as it should, as the free market would do. So what the Fed is doing, the free market would have done a long time ago. It's just now doing it because it's panicking because of inflation. So, again, Powell, here's what they're thinking. We could break the economy, and if it gets really, really bad, we'll just do massive QE and stimulus, and hopefully by then we literally put the genie back in the bottle and inflation's dead because the economy is in such recession. And then they'll come out with emergency stimulus. I think their game plan, though, is to do the soft landing as much as humanly possible. But because inflation's been running high for like a whole year now, the soft landing's pretty much not going to happen. And they kind of know that, but time's running out to stop inflation. So that's why Powell is hawkish. And he made it very clear in the last FOMC. What else did he say? There was one point in during the press briefing where they kept asking the same thing. So the pivot, when's that coming? When's the pivot? Like they literally kept asking different variations of the same question. At one point he got mad and he said, "Listen, we need to stop inflation at any cost." And he meant it. He was getting angry. And the funny thing is, the market is calling this. Wall Street is fighting the Fed. That's what's been happening all year. That's why you're seeing these massive rallies in the market. And every time you see a rally in the market, what happens? Commodity prices go up. Oil goes up. Equities go up. A lot of these tech companies pay their employees with stock options, or they sell stocks to pay their employees, give them bonuses, and guess what? That's where all the inflation. That's where a lot of the inflation is coming from. Well, most of it. And I've been saying this all year. He needs to keep raising rates and raise them faster, harder, and higher. And everyone's saying, no, that you don't understand. There's a 9-month lag or whatever. No, I do understand. And I do understand it's going to be really, really bad. But that's the only way to stop inflation. Like I keep saying this, he has to break things and kind of put the economy in a depression to stop inflation so he could later save it. But the worst case scenario, in my opinion, is actually the soft landing, where inflation's coming down steadily and slowly. The economy is like slowly falling into a recession. And then he pivots because something breaks, but then inflation comes right back within like a couple months. That is the worst case scenario. That's what happened before Paul Volcker, right? Except Powell can't do the Paul Volcker raise interest rates to like 19%, the short end of the yield curve. And in a way, he is kind of doing that, because raising rates to wherever it's at right now, it's like a 4.75%. If you equate that to the amount of massive debt that the U.S. has right now, it is kind of like a 20% rate hike. And it is kind of scary if you think about it, because of all the derivatives and I mean, it's no different from 2008, except it's worse, because it's in everything. The auto bubble is like really big. It's not just a housing bubble, and credit cards are maxed out. So it's like yeah. Here's my flow chart. Inflation's high. For the short term, very bad. For equities, stocks, economy. Long term, good. Because the party might go on. The music may go on. Because that is going to force the central bank to do massive QE, UBI, all kinds of crazy stuff after a depression, which will probably bring it. Not only will it stop inflation, but we might see deflation, and then it takes away the inflation we've seen. That said, it's going to come with massive pain. So the best investment is keeping your job through this cycle. And then he'll be able to bail out everything out and do the massive stimulus again like in 2020. I'm sure there'll be an excuse, a black swan event. Not really. Black swan is an unknown unknown. I believe there is a known unknown. What is the known unknown? And that is what's happening in Eastern Europe, which is like constantly ramping up. And then again, I've warned about this with China, right? I mean, their economy looks really bad from their 3-year long zero COVID policy. I mean, I don't know if they're going to be able to do their Silk Road, and their demographics looks really bad as well long term. But short term, I mean, I believe their commercial real estate, their ghost cities that blew up. Remember, they had ghost cities. They literally had 1/3 size New York City and France in China, like empty cities that look like Western cities. Look it up on YouTube if you don't believe me. Just look up ghost cities in China. Their bubble was so big. I believe they're like, listen, everyone's buying military. They're ramping up. Like, Russia just is devoting 1/3 of their GDP towards military spending. China's ramping that up as well. And when all else fails, go to war. There's that saying, right? And I believe this recession, depression, it's going to be global, and it's going to be that bad. And that's, you know, the Keynesians believe if you do war spending, if you break the window and then you spend money to replace it, that boosts the economy. I literally heard this in school. It's absolute nonsense. Of course, you know, why don't you just destroy everything? What, is that going to be great for the economy because you can rebuild it? No. It's another form of malinvestment, right? But it's really bad because I don't want to go down that road, but you guys understand what I'm saying. So that may happen. When, I don't know. It may just slowly happen. I think that's what's gonna happen. It's gonna like slowly escalate with time, and this could take years. So that's the good news. Here's the other dichotomy with what's going on with the market sentiment and expectations with the rate hike and this, I guess, business cycle, whatever you want to call it. If inflation starts coming down rapidly, short term that's good for the economy, long term that's bad. And why is that? In short term, it's good for the market, but long term bad. Why is that? Well, if inflation's actually coming down quickly now in the next like 6 months or something, then they'll stop raising rates, and they might pivot too soon. And what that ends up doing is the stagflationary doom loop cycle where the economy is in a recession, but it's not like, it's like all the bubbles aren't deflating. They're not like popping. They're just deflating. And what that does is it'll create like an earnings recession we'll have like a lost decade for equities and everything. Cryptos, everything. Because they'll pivot too soon, inflation will come back, and then they'll do the rate cycle again, and it's like you'll just be stuck in this stagflationary ebb and flow of just like a slow recession with inflation. It's just misery. It's basically Japan, except it's different for the U.S. because the U.S. isn't built like Japan, right? It's not, and the society's not like that, and it runs on energy, and we won't have cheap energy. We'll be just stuck in what we're stuck in right now, except it'll just get worse slowly but surely. And then the stock market's just going to chop. It'll just be trading in a range for like a decade. But slightly down. or even if it doesn't trade down, it just trades in like a range, a giant range, inflation will eat away at everyone's gains, and everyone gets poorer anyways. And there'll be layoffs, except they won't be like quick. They'll just be slow. Everything will just happen. It'll be like a crash in slow motion. And it's really bad for equities. And, you know. So I'd rather have the Band-Aid ripped off. And that is my inflation, rate hike, economy flow chart. I'm going to post this on my Twitter. I have a new Twitter. I should bring it up. Hold on, give me a second. See if I can bring it up, if it even comes up. I made it a few days ago. It's not popping up. My old one pops up. By the way, the censorship's way worse on there now. Nothing's gotten any better. In my opinion, I see it. I see my old account. Alright. Find it for my other Twitter account. I have a few of them. Bear with me. Here we go. So go to my new Twitter. I'm going to post this chart up there for free. And yeah. I only have a couple posts. I only have 64 followers, but there's over 1,000 of you regulars who follow me across all my social medias. And please follow me. I'd appreciate it. If you follow me, I will, in the next few days, follow you back if you want. If you have a big account, I'll follow you back. If you have a small account and you leave something in the comment section or DM me on Twitter, like, I'll follow you back. Or if I know you've posted or retweeted my stuff a lot, I'll follow you back. And I will blow up my account, like my following again. I have to get situated. I have a lot going on this year. But yeah. All right, let's look at the charts. Shots. All right. Let's look at the NASDAQ real quick. Here's a weekly chart. Just so you guys see it. My blue line, minimum, that's where it's going. That's about 1,000 on NASDAQ. But I think it's going lower as the rate hikes really start kicking in. Because again, there is like a 6 to 9 month lag. So we haven't even seen the 75 basis point hikes like ripple through the economy and start hitting these junk corporate bonds for these zombie companies. That should be interesting. Here's the Dow. Dow's holding up way better than the NASDAQ. I mean, the NASDAQ fell since the COVID. Well, let's do since 2008. It's only fallen about, wow, it's fallen 33%. That's where it's at right now. A little more, almost 40 at its low. Here's the FANG index. Let's see where that is. So the stay-at-home tech stocks, that's down 42%. Dow's been holding up stronger because it's commodity-based, industrial, right? It's due since 2008. Give me a second. It's only down 11% currently. Let's take a look at the S&P 500. It's down right now 19%. Let's take a look at the Wall Street cheat sheet. Look at this pattern. Giant bull trap. We just need to cool off for the next rally. This complacency part is the Fed's going to pivot soon and they're going to bail us out because everyone's so addicted to the cheap Kool-Aid money. Because this is, I mean, you could say this was the bull trap, but these are all, yeah, but this rally was pretty substantial on the S&P 500 this past week. Now, I missed out on this rally. How long did it last from that bottom? This is a daily chart, by the way. Lasted 50 days? No way. Did it really? This rally? This end of the year? This is the Santa Claus Christmas rally, in my opinion. Well, it lasted 48 days. About 50 days. And I did not long this. If anything, I've been adding on to my shorts and my inverse ETFs. I don't outright short in my volatility this entire time. And I believe this was just another bull trap. The trend hasn't changed, guys. But, I do expect something like this to happen. Anytime now. Just patiently waiting, right? Now, I did show you guys in my last video. I just copy pasted 2008 and it just lined perfectly up. I don't have to do that again, right? So that's my macro. That's the giant swing trade. Now I am looking at stocks and individual things right now that might pop as soon as that crash is over. Let's take a look at Bitcoin. But I'm already, doing good on a few things. Like home builders. Well, it's really well, and a few other stocks, but nothing too crazy. Bitcoin, it's on my blue line, and it's below it now, and it looks ready. There's rumors Binance US is a front. OKX is not allowing withdrawals. It's pretty systemic. And I tweeted that out like months ago. I'm like, as soon as FTX started pausing withdrawals, I was like, this is it for crypto, and pretty much was. It was very obvious. Let's go to a monthly on Bitcoin. So my candles traded below my buy signal, and I ignored it, and that was a good call. And yeah, I just see more downside. it's going to go with the stock market. NAV is like 40%, something crazy. You can pretty much get Bitcoin at like a 40% discount to the spot on using GBTC, the grayscale, right? But that NAV, until it disappears, I don't see why there's no reason for Bitcoin, the physical Bitcoin, whatever, to go back up, right? And again, it's still correlated to the stock market. And listen, when there's going to be layoffs, I just don't see any positive news, any catalysts, especially with Powell being so hawkish last FOMC. And I warned you guys the day prior to that FOMC he's going to be hawkish. I've been right, like, this entire year. Did I miss that last rally? And I didn't miss, like, I chose to miss it, okay, guys? I chose to miss this. It's too risky for me. There's just too much going on geopolitically and everything. I just chose to miss it. That's all it is. I just didn't go long. I just hung out in cash and I held on to my shorts and my volatility and all that because I haven't leveraged it. I wasn't doing options. And I planned this, right? I planned I planned for the bounces. And then to add onto my positions when the bounces sell off. And that's what's happening right now. This is the S&P 500 daily chart. All right, back to crypto. These are weekly charts, by the way. Well, this is a monthly on Bitcoin to the left here. And I posted charts for private members. Let's take a look at, well, let's go back to markets real quick. This is actually more important. All right, 10-year yield. The second it pops back up to 10-year, when it gets back up of 3 as soon as it goes to like 3.5 and back up, markets will sell off, metals will sell off. This correlation has not broken yet, and the DXY will pop and rebound. Now, I said this in the private group. There is no way they could allow the Dixie to fall below 100 handle. I mean, they should put a stop to it right now. Because the DXY keeps falling as equities rise. That makes inflation go up. And then what does that do? Well, that makes Powell to raise rates even more and hold them higher longer, right? So the higher the markets go, the more they screw themselves, because that means the longer and the higher the rates. And that brings us back to my flow chart. And I don't see anyone else saying this, really, to this extent. They like hint towards it, but not the full picture. And this has severe consequences or implications for the bond market, for reverse repo and all that, and treasury issuance. Eventually tax receipts are going to go negative, and you can't. So if they don't raise rates fast enough and crash this bubble economy, what's going to end up happening is the interest on the debt for the entire U.S. Is higher than the tax receipts. At the same time, though, a lot of that income for the government comes from higher capital gains, right, from equities. So it's like, man, they're damned if they do and they're damned if they don't. So they kind of have to crash it and then reinflate it real quick. And then they have to pretty much like smother the fire. So imagine, here's another analogy. My brilliant analogies. They're sometimes just horrible. I think this one's a good one though. So inflation is a fire, right? And it's like you're having a campfire, and they need to instantly pour water on it and just completely stop the fire, get all the embers out, so it can't restart overnight. And then, like, the next day come and just start a whole new fire. But if they try to put the fire out and then it just, like, starts back up overnight, then that fire, which is representing inflation, will spread and take out their, they'll take out your logs that are next to the fire. And then the party's over, or the bonfire's over. I don't know if that was a good one. You tell me. Put in the comment section. All right. And this all has to do with energy as well, and oil, which is there's so many moving parts to oil. It's at 75. This administration, because they're so brilliant, told everyone, they announced to the world that they're going to start refilling the strategic reserve, the strategic reserve that they've been depleting all year. Why would you just announce it and not just slowly do it in secret? Because that's going to make the price of oil, go back up. Also, Keystone had a huge spill. It's not in the news, probably because they're afraid of oil going back up. And I think the Ruskies are playing, with the BRICS, they're playing a game where they want oil to go back up because they're profiting off of it massively, and it hurts Europe. It hurts the West. That's strategic economic warfare. That's how it begins. And then it ends with, more physical stuff. Kinetic. Here's gold on the left. It should fall with the 10-year yield popping back up. And according to my technical analysis and all my indicators, it's overbought, and this was a nice rally. I did not really participate in this. I did sell more of my mining stocks that I had left. In my core position, I just raised more cash. That's all I did on this bounce. Now listen, I mean, once, the market crashed, and this happened in 2008, just like this. We had a huge rally in metals, then the market crashed right afterwards, took metals down to a whole new low, multi-year low, and then they rebounded like crazy. It took off like, it was wild. Let me show you. I do this every once in a while. Alright, here's 2008. So metals were dumping, had a huge rally right here. Huge rally, and then it crashed. Right? I could probably take this. Check this out. I haven't done this. Let's just do it now. Let's take this and bring it to the current. Give me a second. I have to scroll many years. All right. Oh, wow. Look at this. I mean, it doesn't, match up perfectly, but, well, it does, kind of. I mean, again, history rhymes. It doesn't repeat exactly. I mean, this is close enough. Here, let me put it like this. It's kind of like that. See this? This is where I believe we are at. And then it will rebound here. There. How low will it go? I believe it could easily wick down to 1500. At least 1560. I don't know. We'll see. I mean, I'm going to play day by day when that happens. Okay. Gold and oil have a lot in common. There's great correlation. I do believe the game plan here is to get commodities and energy down. And with a global recession, oil is going to go down. Demand destruction will happen. And I believe it's going to be full effect after this holiday season. Especially if there's massive layoffs, right? You're not driving anywhere. Natural gas. Here's the thing with natural gas. It should be like making all-time highs with winter, severe cold winter blizzard, freezing temperatures coming. We'll see if Texas grid goes down again like that one year. I do see a little more downside in natural gas, but there will be a buying opportunity soon. Maybe in like a few weeks. And this perfectly is all timing out to be, there's a huge, massive, like market sell-off coming like soon. It has to come. We might get a Black Monday tomorrow. I don't know, but it would not surprise me. Agriculture, one of my core staples of my portfolio, did amazing. And the guy who brought my attention to this, market veteran here for decades, I believe, he has another great pick for the private members. I believe that's going to do very well as well. But hopefully agriculture sells off with the rest of the market, at least gets back down, and then I'll buy the dip. Also, there's another opportunity to invest in like farming. It's really neat, and it's affordable, and it's just a great way to have like a cash cow for the next decade or two. Like, you know, a nice little cash cow, like extra 4 to like 8 grand every year. That's for private members. All right, let's look at the news. Futures valuation math suggests difficult markets in 2023. You think? What else? Look, Eastern Europe, man, it's a basket. Like it's bad. I feel bad for them. A lot of people are gonna be cold this winter, real cold. And if that cold front coming through the U.S. makes its way to Europe, man, are they gonna have some serious problems. Oh yeah, the ECB was pretty hawkish. Well, here's the thing: they have to keep up with the U.S. Fed, right? If they don't, then their currency and their markets, I mean, they have to raise rates with the Fed, because if they don't, their currency just really starts going in free fall, and then that causes gilt situation, their pensions to blow up. And by the way, that's not going away. They just put a temporary band-aid on it. A huge aquarium broke. That'll be a great meme for the markets. Markets are confusing a collapse in demand with improvement in supply. Yes, they are. I don't want to read this because I don't want to make this video too long. I'm just gonna say what I believe. Demand is... So I've got a guy who has like... He took some of his hex gains bought a fleet of them, and business was booming for the last 2 years. But now it's come to like a halt during the holidays. Let's say there's a lot more drivers now, right? So it makes sense. So it's not like, but the U.S. Amazon sales are way down versus other holiday years, right? There's empty ships and empty shipping containers just littering the West Coast. I mean, that's all you need to really know, guys. That's the bellwether canary in the coal mine. What is this? Forget inflation, this is what matters. I'm not buying this. If you think, listen guys, if you feel sorry for yourself, there's people, in Ukraine, like, getting trench foot in freezing temperatures. They're in like trenches with freezing water. It's probably frozen by now, and there's no electricity. Like, it could always be much, much worse. And it's a meat grinder. It's really horrific what's happening there. You're not seeing a lot come out of there, like videos and whatnot, and that's for a reason. And there is massive layoffs on Wall Street. Good. Listen, because the economy's been financialized and all of our manufacturing's been exported, so we could live like kings in the present and sell out the children's and great-grandchildren's future, well, there's a price to be paid for that. By the way, there's they'll raise the debt ceiling. It's not even worth talking about. SEC begins to ask questions as Blackstone's flagship funds hit redemption limits. Listen, this is only a one-way street. When they start doing, when they start holding withdrawals, especially for real estate right now, because the only way is down for years. It's like FTX. And then I guarantee you there's more systemic risk. I just watched not too long ago The Big Short, and they're doing it again. They're just calling it something else. What they did in 2008. It might not be quite as bad with the ninja loans, but it's bad. Powell ignored the latest CPI data. Latest FOMC forecast is bogus. I don't know. Yeah, I mean, I question him. All of this news is from like earlier last week. Here's a huge cold front coming through. By the way, guys, we are, they've been screaming global warming. Then they changed it to climate change. And it's all about the carbon scam that I've been pointing out for years, since like 2016. And now everyone else is talking about it. Listen, we're going through like a solar minimum, whatever. We're going through the cycle of a mini ice age. Now, it's not going to happen like over, it's just going to get worse slowly and slowly. And, it's not going to be a straight line, just like markets. We'll have weak winners again. But listen, I mean, look at these temperatures. Fahrenheit. This can't be right. Negative 25 in Texas? There's no way. I don't know. But it's bad. It's going to be freezing in Texas again. We're going through a mini ice age. And it's something to do with, it could be with the poles flipping, or the North Pole's been moving, right? And that messes with the underground water river underneath the ocean. I forgot what it's called. The water beltway or whatever that takes warm water from the south to the north up towards Europe. Where was I? Give me a second. Let me read. I haven't really looked at the news. The global gas crunch is set to worsen as China reopens. Yeah, I mean, if they reopen, demand will pick up, especially for LNG, natural gas. That's why I'm looking at it. I just think that the market's going to take it down with it temporarily short term. By the way, the hedge, it's an aggregator of many articles and news from all over the place. It's not like one guy writing all these. Oil exports from key Russian port cut in half as price cap kicks in. Oh yeah, there's more sanctions, I guess. It's just stupid. Just creates more black markets and makes the price go up, right? $70 million Americans hit with hyperinflating nat gas prices. Huh. That's interesting. That's news from December 16th. That's on the West Coast. Everything bad happens there. These are the world's most expensive cities. I really don't care right now. Why is... They're doing these brain implants. You know what? You guys go first. We'll see how that works out for you. I'm gonna stay natural. That's how I live my life. I'm trying to go backwards. I'm trying to go backwards in time. It's funny because the more advanced you are with tech, the more you want to head backwards in time towards the horse and buggy. Okay, so I don't really want to talk about Twitter. It's just so much nonsense on there. All the grifters, both sides. This is great. They're showing off their nukes. So I do want to talk about this. The perfect storm arrives. So I was listening to another YouTuber. The average monthly payment on a car right now is like over $1,000 a month. So I've noticed this in the past 2 years since the coup, right? Everyone's driving, a lot of people are driving brand new cars. And they don't look like they should be. Like it's, and the amount of people driving new cars. Like the average 60-month loan, subprime auto loan, over $1,000 a month. And they probably, that we have a massive car bubble. That's what I heard. Don't quote me on that. On the exact figures. Hey, check this out. I actually agree with listen, guys, there are factions of the top, the ruling, who aren't batshit crazy. And he's right. It's time for negotiating peace. It just is. Because the consequences are like, and nobody's supporting it. And what is it even over? Is it really over like a chunk of that country? I don't believe so. Again, it's like the breadbasket. There's a lot of energy there. I get it, but it's mainly I don't want to go down that road either. Why? It's just some things you can't talk about. When will air travel return to pre-pandemic levels? Probably not in a very long time. Alright guys, I don't really see more financial stuff. Principal market worry is shifting from inflation to recession. Yeah, here's what's funny, guys. The market is rallying on hopes of a pivot, but do they understand that the pivot only comes if we're in a deep recession, which is also bad for stocks because of corporate earnings? Like, honestly, it's pretty common sense here. Alright guys, go to my Twitter so you guys can get this flow chart. And follow me, please. And listen guys, I was on Twitter since 2016 for like over 6 years. And there was no reason. Like I wasn't doing anything spicy. Matter of fact, I was supporting Mr. Elon. And not that I really do, but you know what I mean. Gotta play ball. And out of nowhere, just gone. 6 years. And I'll shadow ban that entire time. So I don't feel too bad about it. I kind of feel like a, burden was lifted off my shoulders. Honestly, I feel better since I've been off of it. I've been wasting time, less stress. It's just nonsense on there. But I do, I do need a presence there. And 6 years of tweets just gone, and history just gone. And you know what? It is intellectual property, and I could probably sue him. Because it is a business account, it's for a business, so. And I just lost all my following, and the people are following. It's really shitty, man. After 6 years of just posting my ass off, getting barely any traction for all my hard work, and then they just, no warning, nothing, just gone. He's destroying it. And, what goes around comes around. Let's take a look at Tesla. Almost forgot. Next FTX, I'm telling you. Ever since they put in the NASDAQ, NASDAQ's been doing pretty bad. Let's put on the log chart. Look at that. It's got a long way to go. I wouldn't short it though, because you never know. With the, because the Tesla crowd and Elon, he's pretty tricky. So he could cause a short squeeze, like when he had funds secured, which was just a lie, to cause a short squeeze, and billions of dollars just went up in smoke. Like he literally scammed like thousands of traders out of their money, because they were rightfully so, for fundamental reasons, shorting it. Yeah. This looks like just a giant air gap. Just a giant air gap. Let's see how far. And oh, by the way, he sold the billions of dollars worth of stock last week. Next support is, holy shit. Well, from the bottom low, from the move of 2020, the COVID low, it's a drop of 83%, I guess, from $150 to $25. Yeah. Yeah, that's what I'm looking at, guys. Let's do a fib retrace so you guys learn. Alright, I don't want to make this video too long. Go to my website. Take advantage of this. This offer ends at the end of the year. You have till the end of the year. $10. You have no excuse now not to join. And then $20 every month. So $30 for just 1 month. Try it out. I will be dropping more updated research on mining stocks and everything. I'm just waiting for this bottom low to come in for equities, and also opportunities in crypto as well. Whatever survives in crypto will probably make you super rich off your ass. Mining stocks are going to do crypto moves from the bottom low. But it depends. But jumping into individual mining stocks, that's not what I'm going to be doing. I have a strategy. And then I do have some stuff that's going to do really good during this crash. And there's some stocks that are going to do really, really well during the recession, depression. So, yeah. Join the private group. And we talk about all kinds of crazy shit in there. Like stuff that, I'm not willing to talk about here. The stuff you guys really want to hear, right? But, Alright guys, smash like, leave anything in the comment section. Please share my videos so my channel grows, and take advantage of this discount. I've never done it this low, this cheap. I'm just being, I kind of need it right now for, positioning myself, and I understand that everyone's struggling, so I get it, Alright guys, until next time.